Ladies and gentlemen, good day and welcome to the Ramkrishna Forgings Limited results conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by dialing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Basudev Banerjee from ICICI Securities. Thank you, and over to you, sir.
Right. Thanks to all participants. Good evening, all. Thanks to management of Ramkrishna Forgings for giving us the opportunity to host the Q3 FY23 post-result call. Company is represented by top management, the former Mr. Naresh Jalan, Managing Director, Mr. Lalit Khetan, Executive Director and Chief Financial Officer, and Mr. Rajesh Mundra, Company Secretary and VP Finance. Over to the management of RK Forgings for their initial comments. Post that, we'll take the Q&A. Over to you, sir.
Thank you, Mr. Banerjee. Ladies and gentlemen, good evening and a very warm welcome to everyone present on the call. And wish you all a very happy New Year from the entire Ramkrishna Forgings. I have with me Mr. Naresh Jalan, our Managing Director, Mr. Rajesh Mundra, our Company Secretary, as well as our Investor Relations team from Orient Capital. I hope you all have got an opportunity to go through our financial results and investor presentation, which has been uploaded on the stock exchange as well as on the company's website. I am pleased to report that our company has had a strong Q3 and 9-month FY23. The commercial vehicle segment has been seen steady growth following the festive season due to high utilization of fleets resulting from increased economic and infrastructure activity. The momentum is expected to continue and overall commercial vehicle market is predicted to remain strong, driven by an increase in economic activity and government's emphasis on infrastructure and education. We are also proud to announce that this quarter we have won 3 orders worth 366 crore, INR 366 crore from North America and Europe. Out of this, one order is for supply of EV component, which demonstrate our confidence in EV space. The demand from these countries has been increasing, and we aim to grow our export by 15 to 20% in this year. North America will continue to do well, and the increasing import from Europe will continue to give us more opportunities to participate. In line with the industry, we have seen an increase in demand as well for our products, which has led to significant growth in our revenue and profits. In Q3, we have recorded a revenue of INR 752.30 crore, which represents a year-on-year growth of 24%. While 9-month FY23, we recorded a revenue of 2,165.60 crore, which represents a year-on-year growth of 35%. EBITDA margin for the quarter stands at 22.10% versus previous quarter of 2.30%. Our net profit after tax for the quarter is 57.57 crore, which is a year-on-year growth of 27.6%. Our net profit after tax is 168.77 crore for 9 months ended FY23, which is a year-on-year growth of 40.8%. To diversify our product portfolio, we have continuously taken steps to increase our diversification and to strengthen our foothold in EV space. We have acquired 51% stake in CO manufacturing. This will significantly improve our capabilities and expand our market share in evolving EV segment. Furthermore, our recent plan to acquire JMT Auto has got approval from the Committee of Creditors, which is subject to obtaining the necessary approval from the NCLT New Delhi. The strong performance is a reflection of the diligence and commitment of our team, as well as the continued support of our customers and stakeholders. We remain committed to delivering high-quality products, enhancing our content per vehicle, providing superior services to the customers, and we are confident they will continue to see growth in the future. Thank you for your continued support and for joining us today. We are now ready to take questions from the audience. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Ladies and gentlemen, if you are using a speakerphone, please pick up your handset while asking a question. We will now wait for a moment while the question queue assembles. first question is from the line of Sanjay Dam from Old Bridge Capital. Please go ahead, sir.
Thank you. Congratulations, Mr. Ketan, Mr. Jalan, Mr. Mundra and team. Wonderful performance. I just wanted one clarification. In slide 21 of your presentation, you stated that you're adding 56,300 ton capacity, which will be ready by September 23. And with this capacity, we'll be able to achieve a top line of 5,000 crore at current commodity price. Just wanted to reconfirm that, because if I look at the trailing 12-month revenue, we've done about 3,000 crore of revenue. So you're saying that with this increase, we'll be able to do 5,000 crore. Is that correct?
Yes, that's correct.
Yes.
Perfect. And broadly, I think this quarter is also very significant because we ended up with the highest ever EBITDA per ton sold. I think it would be in excess of 58,000 rupees a ton. So going by that yardstick, when we do hit that 5,000 crore of top line, that should, if we are able to improve the EBITDA because of better mix, higher content, etc., that would be a welcome change. But if we even maintain that, we are looking at a broad kind of EBITDA of about broadly about I think 2,900 crore.
I think, Sanjay, it is very difficult for me to give you a EBITDA number.
Yeah, I understand, sir. I was just seeing that whatever you have.
Overall, whatever we have said in the presentation is that with the addition of the 56,000 tons of capacity, we will be near around approximately 235 to 240,000 tons capacity, which is good enough in the value add. The way we are improving our value add per and content per vehicle, and as well as non-auto segments are getting added, we feel that we will be able to touch 5,000 crores of revenue. That we are confident of that, and depending on the current commodity pricing, how it moves during the year. But in terms of EBITDA, it is very difficult to say right now.
Yeah, I understand.
What is going to be the EBITDA per.
Yeah. But irrespective of whatever whichever way the commodity moves, that can move your top line for sure. But EBITDA per ton should be defendable, right?
Yes, we will be able to maintain our margins what it currently is.
Yeah, I mean, yes. Okay, that's good enough. And the second is, if you could now, when you get the NCLT approval for JMT auto capacity, what is the capital allocation that would be required there?
We have already given in our presentation. The cost of acquisition has been 125 crores for us, out of which 70 crores is being paid upfront, and balance is going to be paid over the next 4 years. And we will deploy further 50 crores of capital in this by way to do capex in the organization and as well as the working capital.
And what do you expect out of this capacity, sir?
It is a mix of forging and casting capacity with value add. So I think if we go by the historical numbers, what JMT had published being a listed company, I think at that period with the commodity pricing what was prevailing at that time, they did a peak top line of close to 375 crores. So I think with those numbers and with the current commodity pricing, we feel that once we are able to get the plant up and running, we should be able to do anything between 450 to 500 crores top line from that.
Yes, that you should be. And broadly, what is the timeline you sense?
We sense, We don't know the legal time what is going to be taken in terms of handing over the plant. Once we get the plant, I think it will take us approximately 18 to 20 months to get the plant up and running and in full production.
Perfect. That's all from my side. Wish you all the best.
Thank you. The next question is from the line of Mumuksh Mandlesha from MK Global. Please go ahead, sir.
Thank you so much for the opportunity, sir. Sir, you mentioned that exports are expected to grow 15 to 20% for next year. Can you share what would lead to the growth while the underlying market may be flattish, sir?
In terms of exports, we feel that the amount of new customers we have added and whatever orders are there in pipeline and whatever contracts we have won in this year, which will get into production in the coming year, as well as the new geographies which have been added, will result in at least 15 to 20% improvement in our exports.
So it's mainly market share gains and new products should drive the growth, right, sir?
I cannot comment on market share gain. We are gaining new customers, new geographies are getting added, and that is what I cannot comment on market share gain, because these are all new products for us and new geographies. So we don't know what is the market right now there, but basically with the commitments received from the OEMs or the customers, we can safely say that we should be growing around 15% to 20% next coming year.
Right, sir. So on EVs, which are the EV specific components companies working on, and what are the plans of investments for the EV products? And also, can you talk about the recent investments? So what kind of revenue potential and investments you're planning, sir?
I think I will answer your question in two parts. One Lalit will take up in terms of Suyo. In terms of our current capacity, we are mainly working with our current OEMs for e-axle as well as differential and motor shocks. These are the few components wherein we are working with our current customers from the current capacities for supplying EV components. In terms of Suyo, I think Lalit can update you on that more.
Yes, from the Suyo, we will do the investment in phases in over 5 years. It will be done around 100 crore investment will be done in Suyo. And we are there making products like a motor, controller, differential, and e-axle, complete e-axle. And that is the product line we are looking at. And then further, we are looking at the high wattage motors, but that will be go to the higher vehicles. So that's on the Suyo.
Got it, sir. So this quarter, non-auto segments like mining and railways have done very well. So what led to the growth, sir?
So basically, the capacity, we in our previous calls also we have said railway is a segment which will continuously grow, and I think it is just the start of the growth right now. You will see every quarter the railway will keep on adding in terms of percentage and absolute sales, as well as the earth-moving equipment side.
Right. So, possible to share the targets for the railways and for next year?
No, I think in next year is too early for us. We will wait till the full year is getting completed. But for current quarter which is going on, we can safely say that we will do much better than third quarter which has ended.
Got it, sir. Thank you so much for the opportunity, sir.
Thank you. The next question is from the line of Dhaval Shah from Girik Capital. Please go ahead, sir.
Yeah. Hello. Am I audible?
Yes, you are audible. Go ahead.
Hello, team. Great set of results. So first question is for the third quarter. If you look at the geography mix, the revenue share from Asia is now 90%, while North America is down to 2%. So what is this change? Where is this certain big change in this geography mix has happened? If you can elaborate on that. And second question will be our quarter-on-quarter finance cost is slightly up. Some clarification on that as well. Yeah, these are my two questions.
No, in terms of geographical mix, I think North America is 71%, Asia
is, Asia is 71%, Europe is 12%, and 17% is North America. North America from 21% is down to 17%, but that's basically down only because in terms of absolute numbers, it is not down. But in terms of increase in balance sheet, we had in earlier calls also indicated that Europe is going to grow fast, and also customers added in the Asia Pacific are also going to start showing traction. So that's the reason North America sales looks to be down in nine months balance sheet.
So if you break down okay, I'll take this offline, no problem. Yeah, and on the interest cost?
Yeah, Dhaval, on the interest cost, see, because in the last 9 months, there has been almost 250 basis point rise in the interest cost by the RBI. And there has been a lot of raise, almost 450 basis point rise by the Fed. So that, 225 basis point raised by the Fed also. So what has happened is all interest reset has come out in the month of September and October for us in the long-term loans. So that has impacted us in this quarter a little bit, and that's why this interest cost gone up. And working capital cost is constantly going up due to that.
Okay. And sir, what is the working capital as on today? How much is the working capital days?
Working capital days right now, I can say that it has reduced little bit from the last quarter, maybe 5 to 7 days, but almost near to the half what was in the half year.
Okay. And so our debt is now 1287, and so by 31st March, how will this number look?
We look to reduce another 50 crore by 31st March.
Okay. Okay. Thank you, sir. Yeah.
Thank you. Ladies and gentlemen, as a reminder, you may press star and 1 to ask a question. The next question is from the line of Abhishek from Dolat Capital. Please go ahead, sir.
Thanks for opportunity and congrats for strong set of numbers. Sir, just wanted to know what is the outlook for the Class 8 trucks and fourth quarter domestic MHCV volume.
I think for Class 8 trucks, we see this market to remain strong, and I think with the same levels, I think what we ended year 22. I think 22, 23 also will be same. I don't think the industry is going to grow for what it has been in 22, but it's going to remain flattish in calendar year 23. In terms of MHCV, we see a lot of traction in the domestic industry, and I think domestic industry is doing really well as we speak right now.
And as you are targeting around 15 to 20% growth in export market, so what kind of the growth you are targeting in the North America and Europe?
No, we will not be able to give growth geographically right now. I think in overall exports, we should be doing close to 15 to 20% higher exports. But it will come basically through new segments, new components, as well as the new geographies which have been added. And already most of the announcements have been made by us as we continue to win new orders.
Okay. So what is the overall volume growth target you are for FY24, sir?
FY24 is quite early for us to say anything, but I think you'll need to wait for the full year for getting FY24 targets.
So in export, you mentioned that 15 to 20% growth. So what kind of the growth we can see in the domestic market?
Domestic market is extremely strong as we speak right now. So okay. I think I need to wait for the full year to get completed. Exports we can safely say because the calendar year, they work on calendar year and it has ended on December 22, and we have already got projections for this full year from our export clients.
Okay. And sir, in realization terms, we have seen a 5% decline in this quarter. Is it because of the fall in the freight cost or fall in the commodity prices?
And mainly because of fall in commodity price.
Okay. And as the steel prices corrected 20 to 25% in last 6 months, so will see the further decline because of this?
I don't know exactly from where you have got this 22 to 35% steel decline. So I will not be able to comment on this. As we speak, we have got close to 8 to 10 rupees kg price reduction, and that is already reflecting in our export sales.
So I was talking about the Indian steel prices that has
No,
gone
we have not seen any steel prices decline in India in automotive steel.
Okay. And sir, in this quarter, employee expenses has gone down. Is there any layoff?
No, there has been no layoffs.
It is mainly due to the last quarter, it was bonus and the increment impact was there. So it is now normalized. Next quarter, it will be at this level only.
Okay. And my last question is related with the tax rate. What would be the effective tax rate for FY23 and 24?
See, FY23, we are in the highest tax bracket, and we hope in the next year we will move to 22% plus surcharge tax bracket.
And this year it would be around 32%, right?
Yeah.
Thank you, sir. That's all from my side.
Thank you. We have the next question from Mahek Talati from Yellow Jersey Investment Advisors. Please go ahead.
Thank you. Thank you for the opportunity. So I wanted to ask that steel prices have come down by 40%. So what is the realization and margins you are expecting?
Ma'am, I really don't know from where the figure of steel prices have come down. To the previous question, I have already said for us, steel prices in domestic industry has not corrected, and it is still the same what was there in previous quarter.
Okay. Thank you.
Thank you. Ladies and gentlemen, in order to ask a question, you may press star and 1 on your touchtone phones. The next question is from Mitul Shah from Reliance Securities. Please go ahead.
Sir, thank you for opportunity and congratulations on good set of performance across all the parameters. So first question is on export incentive, which is sizable around 60 to 63 crore during the quarter, whereas Q-on-Q export revenue is flat, but this incentive is jump of more than 21%. So just want to understand how it is any spillover of the previous quarter, or it is linked with the geography related or product to product variation?
Mitul, just like to correct you, this is 6 crore, not 6.260.
That's sorry, 62 million.
6 crore. And that is on the entire exports, okay? And that comes out to only 2%. That includes duty drawback and road tax. So duty drawback is 1.6% and road tax is 0.7%.
Okay. So second question is on non-auto side. Sir, we are talking a lot about this railway part, but other non-auto like mining, earth moving, farm, etc. is contributing more than 8% of the revenue now. So can you give more details here within this segment? How much or would be farm equipment? How much would be mining or earth moving? Or what is the approximate bifurcation?
No, I think it is difficult, Mitul, to give you a bifurcation between these 8%. But overall, company looks at our non-auto segment has grown and we will continue to grow, I think, in the coming quarters also in the non-segment. Both railways and mining and earth moving and farm equipments will continuing to show traction, and we expect in coming quarters this to significantly scale up further.
Sir, any qualitative aspect in terms of this within this farm equipment or earth moving, what could be major or maybe in terms of growth wise could be higher than the other segments?
I think all the three segments are doing extremely well. So I cannot put a specific data to any particular segment. So all the three segments are doing extremely well, and we feel that this is right now going to be a qualitative percentage in terms of the overall balance sheet.
Sir, lastly, on oil and gas side, what is our development? Earlier, we were trying to gain market share from the giant competitor. So what is status there, sir?
No, we are already doing extremely well, over 0.9% in the last year, full year. We have done close to 1.6% in 9 months, and I think this is going to further grow to close to 2 to 2.5% of the entire balance sheet.
Okay, sir. Thank you.
Thank you. Ladies and gentlemen, we have the next question from the line of Deepak Podar from Sapphire Capital. Please go ahead, sir.
Hello.
Yes, sir, you are audible. You can go ahead.
Yep. Thank you very much, sir, for the opportunity. Sir, you mentioned with this new capacity, our revenue potential can be 5,000 crores, right? So that is what we are trying to achieve by maybe FY25. That would be a fair thing to assume, right?
Yes, we are trying to achieve that by FY25.
So that effectively means a CAGR of 25-26% over next 2 years, right? I mean, that's what we are looking at.
Yes, company basically is visualizing, or company is basically earnest desire of the management is to touch those figures. And probably we will be able to throw much more light into it when we end this year and when we start are able to give you a full year guidance in the full year result.
Okay, fair enough. And now, I mean, when we are at about 5,000 crores kind of a top line, currently you did mention that this 22% kind of a EBITDA margin is a sustainable kind of thing, right? But given our gross margin is 55%, so ideally that effectively means we would get operating leverage advantage when we reach maybe 5,000 crores of top line, right? So there should be upside risk to this margins maybe over next 2 years.
No, I don't think there is a risk to the margins. Like I said in my previous answer also, that we want and we are committed to maintaining these margins of 22+% as we continue to grow. And with whatever current horizon, what we look at in terms of order book or in terms of commodity, we feel confident that we will be able to maintain the same.
No, so risk in the sense that I was kind of indicating the upside potential because of the leverage, right?
Obviously, we continue to desire to go right the upside in terms of profitability, but we can commit to maintaining the margins. But whatever comes will always be in the investor domain.
Fair enough. And my last question is regarding the debt levels. I mean, you have mentioned in the past that we look to become net debt free by FY25, right? And currently, what we have about 1,400 crores of debt.
No, I think you're wrong. I think our debt is below 1,300 crores. I think 1,280 is our debt. We have already, if you see, significantly around 300 crores of debt reduction in 9 months we have done.
That's good. Yeah.
So we expect to another 50 crores reduce in this quarter. So it is a continuous process. We are on the job to reduce debt.
Okay, but net debt free is what, FY25-26 is that?
Yes, we still maintain the targets of being a net debt free by FY25-26.
Okay. Yeah, that's it from my side, sir. All the very best. Thank you.
Thank you. The next question is from the line of Viral Shah from Enam Holdings. Please go ahead.
Yes, thank you for the opportunity, sir. Sir, my first question was on the debt number of this 1286 crores. Can you just clarify, does this include the bill discounting number also? And what is the number of bill discounting?
Yeah, it includes the bill discounting number also. All the bill discounting has been included in the bill, which are on.
Okay, and what would that number be, if you could share that?
You are talking about Tata Motor bill discounting, I think, that's 95 crores.
95 crores. Okay, thank you. Sir, secondly, on the capex, I want to understand. So, what is the kind of capex outflow that will happen in FY23 and 24 both?
We have already Yeah. Yes.
Lalit, you can continue.
Yeah. So we have already communicated that 250 crore will be the the capex plan for the FY23, and we stick to our capex plan of 250 crore. And for next year, it will be in the range of 150 to 200 crore.
Okay. So this 250 plus 150 will include the maintenance capex also. Right?
Yes.
Okay. And this 56,000 tons of additional capacity, could you just throw some more light? Is this similar to the presses that we have, or will these be newer presses? What kind of products will these do? Something of that sort?
No, basically in 56,000 tons, Viral, whatever capacity is getting added is basically in cold and warm forging. So mostly I would not like to disclose the parts or what components we are. Basically it is a new generation cold and warm forging.
Got it. Thank you so much.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 on your touchtone phones. We have the next question from the line of Mr. Dhaval Shah from Girik Capital. Please go ahead.
Yeah. Sir, the EBITDA per kilo is slightly lower in the third quarter compared to the last quarter. Is this due to some product mix change?
No, there is no product mix change. Basically, prices of commodities have gone down in the export market, and the domestic steel price is yet to pass on those reductions.
Okay. So you reduced your selling price, but you haven't got the benefit.
Yes. We are still negotiating with the steel plants.
Okay, so that generally happens in April and October, right?
No. Every quarter it happens. It is delayed right now. We are expecting it to happen anytime soon.
Okay, and what is the quantum of reduction you expect?
No, I think we cannot put a number to that right now.
Okay, and so this, assuming the last quarter number as a number for FY23, like around 50 to 53 rupees a kilo, so when you, over next 2-3 year period, how will this number grow year over year?
I think it's very difficult. You are asking a question which I think is extremely difficult to answer.
Okay, no problem. Okay, fine, sir. Thank you.
Thank you. The next question is from the line of Abhishek from Dolat Capital. Please go ahead.
Sir, how much capex would be required for this 56,000 ton capacity?
Abhishek, we have said that we are already doing 254 capex in this year. This is an ongoing capex. The entire capacity will be up. And next year, so another 154 will be required to complete this capex, and that will be it.
So I'm asking about the total capex that would be required for the new capacity, sir. So it would be around in the range of 2.75 to 3 billion, what you mentioned.
Total capacity for this capex, what we are doing is around 250 to 300.
Okay, and this year capex you would be able to do around 1.5 billion capex for the part of the capex as a part.
Could not get you, Abhishek. Can you repeat your question?
So this year capex for the new capacity would be around 1.5 billion.
Not billion. I think 154. I said.
250 crores for current year, and next year we are projecting close to 150 to 200 crores.
Okay. And how much is the forex gain or losses in this quarter, sir?
This quarter forex gain is around 11 crore.
Sir, from last two quarters you are gaining, in the last quarters you had gained around 12 crores, this quarter also 11 crores. So what is the reason of this sort of the forex gain?
That's basically basic currency fluctuation. If you look at the last quarter, dollar closed at 81.38, and this quarter it ended at 82.73. So whatever is the unhedged data, that has been restated with the margin. Plus we do some amount of hedging, there we also make gains.
Okay, and that is coming into the other income?
No, that is part of realization.
They're part of realization. And my last question on the inventory in the export market, how much current inventory is lying in Europe and US?
I think that's we don't have the exact number right now. How much we have there in a warehouse there. We can come that on the we can check offline that.
Okay, sir. Thank you. That's all from my side.
Thank you. The next question is from the line of Shashank Kanodia from ICICI Securities. Please go ahead.
Yeah, so just wanted to check for the capex outlay for next year. It doesn't include the amount for JMT, Auto as well as ACIL, right?
No, it does not include any acquisition.
Okay, so potentially if we are through with both the acquisitions, what could be the cash outflow for next year on both the fronts?
It will be 85 crore for ACL and 70 crore for JMT Auto.
So another 160 odd crores, right?
Yeah.
Okay. So sir, doesn't this is a digression from a capital allocation strategy wherein, our intent was to primarily reduce debt for next 3 years. Still we are going for acquisition as well as organic growth, capex part.
I think in terms of debt reduction, we are continuously doing a debt reduction. In 9 months, close to 300 crores of debt has been reduced. And that does not mean we will not grow the company. Whatever cash accruals are there on the book, it is being deployed for repaying debt as well as doing the new capacity addition.
And these are the growth engines where the incomes will be there, and that is not been taken into our projection. So they will be the self-sustaining company, and they will be able to service the debt taken for investment in these companies. So there will be no load on the RKFL balance sheet in terms of debt for servicing.
Okay. And sir, lastly, you have been maintain a 22% plus kind of a margin profile. But on the EBITDA per ton basis, last 3 quarters, we've been able to maintain the 50 rupees to a kg kind of a run rate. So this is kind of sustainable, right? Given the fact that we are doing more of value added and incremental non-auto business?
We don't calculate EBITDA per ton because we are not a steel company, so we don't calculate in that form. So we will not be able to comment on that.
Sure. Thank you so much, sir.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1 on your touchtone phones now. We will move to the next question from Chirag Shah from Nuvama. Please go ahead.
Thanks for the opportunity. Sir, my question was on this new capacity that is coming up, the 56,000 ton. If you can help us understand that realization from there on per ton basis or per kg basis should be similar to what it is that we have, or it would be slightly better given that it's a new technology or new form of forging that you are having. And second question is, yes, you can answer. I'll ask again later on.
Chirag, I think with this cold and warm forging coming in, I think obviously these are near net shape components, so this will be better realization components, and this most of these capacities will be going for exports. So we expect and we envisage that these are going to be very high remunerating and high realization items.
Okay. And by that presumption, we can assume that at least per, if not in terms of margin, but on per ton basis, profitability would be better than what it is currently, right? Margin profile can be different given that you may also do stabilization and bringing the plant up to the mark curve.
Basically, with the capacity utilization improving in this cold and warm forging as the capacity starts performing, we are expecting because of near net shape components and new technology being put up and low manpower cost in this, we expect margins to be much better than what it is currently.
Okay. And sir, in your assessment, by when do you expect that this capacity can achieve optimal utilization? It will take 2 years?
It will take 1.5 years, almost 1.5 years.
1.5 or 2.5?
1.5.
So suppose you start somewhere in Q2 or Q3, from there around in 1.5 to 2 years, we can assume a kind of full
capacity, yes.
And 56,000 is achievable capacity, right, sir?
Yes, this is achievable capacity.
Thank you. Thank you very much, and all the best.
Thank you. The next question is from the line of Ruchita from iWealth. Please go ahead, ma'am.
Hello, sir. A very good evening.
Excuse me. Sorry to interrupt, Ms. Ruchita. The line for you is very low. We cannot hear you very clearly. If you could speak closer to the mic.
Yeah. Now is it better?
Yes, much better. Please go ahead.
Yes. Good evening, sir. So my question was on the general and other manufacturing expenses, which has spiked up in this quarter. Even though if we look at Q on Q, the sales are kind of flattish. So what is the reason for this spike in your other manufacturing expenses?
The other manufacturing expenses are almost similar to what you have seen in the last quarter. So I don't think there is any spike in other manufacturing expenses.
There is, sir. Last quarter you were doing around 144 crore, which has gone to 175 crore in this quarter.
No, it remains at 144 crore only. I think you are looking at standalone result or on a console number?
The console number.
Okay.
So you're looking at console number, you're comparing with the standalone numbers.
No, the console number is also 146 crores.
146 in both the quarters, correct.
Okay, so my mistake. Sorry. No, but other questions are answered. Thank you.
Thank you. Ladies and gentlemen, once again, a reminder to all those who wish to ask a question, you may press star and 1 on your touchtone phones. We will take the next question from the line of Raghunandan NL from MK Global. Please go ahead, sir.
Thank you, sir, for the opportunity. Sir, my first question is, company has been doing well, increasing presence in auto, EV, and non-auto segments. Can you indicate how you look at a medium-term kind of a revenue share, or how you would aspire to have the revenue share over medium term between these three segments?
Company aspires to have a premix of 70% auto and 30% non-auto. And I think what we are looking in next maybe 6 quarters to 7 quarters to achieve those numbers.
And within auto, how do you see the EV business shaping up, sir? You've been taking several efforts there.
EV business standalone RKSL basis, we are looking at close to around 3 to 3.5% of our total revenue from auto coming from EV, which is right now 2. We are looking at doubling this in next over 12 months' time.
Thank you. And there are several orders that company has won and execution is yet to commence. In FY24, what kind of revenue addition is expected due to new orders?
This guidance of 15 to 20% jump in exports in next year basically is with this new order books, new order wins in new components.
Got it, sir. So, if including domestic exports, would it be fair to say that 400 crore kind of revenue addition can happen next year because of new orders?
I will not put any number to it. Basically, 15 to 20% is what we are looking in terms of exports right now. And for domestic, I think you'll need to wait for the full year results to come in.
Got it, sir. Thank you so much. All the best.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 now. Once again, ladies and gentlemen, if you have questions to ask, you may press star and 1. The next question is from the line of Chirag Shah from Nuvama. Please go ahead.
It's just one small question on EV side. If you can elaborate over next 2-3 years, how do you look that portfolio shaping up? What segments you are looking, which regions you are looking at that could, with the revenue that will come in, from what segments, what and which region?
No, we are basically working with all our customers in EV in passenger vehicle side as well as in pickup trucks and SUVs. So it is in North America, it is in Europe and in India. Right now we are working in, and we are looking at close to around maybe 5% of our overall balance sheet in next 2 years from the auto side to be contributed from EV and all these geographies.
Okay. Any specific preference for geographies based on your understanding, your level of discussion? It would be domestic or it would be more export oriented?
I think more it's going to grow on the export side.
Export side. Okay. Thank you. Thank you very much.
Thank you. The next question is from the line of Kashish Shambhavani from Nigan Capital PMS. Please go ahead, sir.
Hi, sir. Thanks for taking my question. Firstly, I wanted to understand what is the maintenance capex for our plants currently?
Maintenance capex, including dyes and everything, is around 50 to 55 crore per annum.
50 to 55 crore. Okay. And for the top line guidance which you have given, do we also include GMT numbers in that? Because that will also be consolidated eventually.
No, I think GMT is quite early for us to comment on terms of revenue. So we'll wait till the NCLT process is done with.
Okay. And we have been doing pretty well over the last many quarters that been coming down. I want to understand what is the key risk which you envisage which can derail our growth plan in the medium term?
As an entrepreneur, we do not visualize or we do not think of what can derail our growth. And we, as an entrepreneur, we always look at opportunities to grow. And I don't have plan B to understand why we can derail our plans.
Because we as investors are also equally optimistic like you. But I wanted to understand what are the key risks in our business?
No, I think I would like to give it a pass. I would not like to answer to this question.
Okay, thank you.
Thank you. The next question is from the line of Dhaval Shah from Girik Capital. Please go ahead, sir.
Yes, sir. Sir, given the fourth, our exposure to India and generally fourth quarter is a good quarter in terms of the, overall, the capex spend. Would you, our volumes in the fourth quarter would be flat quarter on quarter, or would we see an increase? Any guidance would you like to share?
No, I think it is pretty early for us to share any guidance, and I think we only can say that we are doing extremely well, and we will continue to do extremely well in current or coming quarters.
Okay, great, sir. Thank you.
Thank you. The next question is from Mitul Shah from Reliance Securities. Please go ahead, sir.
Sir, thank you for giving opportunity again. Sir, can you share LCV contribution currently?
Well, right now, I think I don't have that figure. I'll ask Rajesh to forward you that in offline.
Okay. The second thing, in one of the presentations at slide number 14, we have given various components, that is front axle, engine, suspension, etc. So how much would be engine right now?
It is 0.9% of the balance sheet, automotive exposure.
0.9 only?
Yes.
Okay. And sir, last, just a confirmation, our current capacity around 1,90,000 and this additional would be 56,000. So close to 2,50,000 tons capacity, we will be able to reach to 5,000 crore. Is it right, or we are including any other?
No, we are not including anything else. 250 approximate at the tonnage to reach the goal of 5,000.
Okay, sir. Thank you. Thanks a lot and all the best.
Thank you. We have Sanjay Dham from Old Bridge Capital with the next question. Please go ahead, sir.
Sir, thank you so much. So in the latest quarter, we did about 35% of our volumes was export. Broadly in the previous few quarters also has been similar, I think 32%, 36% and thereabouts. So next year the volume mix should also, the exports, do you see in similar lines?
I think we are looking at, Sanjay, growth in exports and if you see vis-a-vis last year, we have grown in exports overall. Last full year, I probably don't have the figures right now, but we have done close to 900 crores of exports. And this year, if you see in first 9 months itself, we have near to that.
Yeah. No, sir, I was saying that in the mix of your sales next year, would exports remain similar at around 35%?
Yes, we are looking at 35 to 40% exports
in
to continue
terms.
in terms of volume and in terms of top line.
Yeah, no, sir. Top line, your exports are value-wise exports are much more than the
no, sir, it is, sir. Yes, that is there, but it's close to 40% overall exports.
Yeah, absolutely, yes. Absolutely. Okay. Got it, sir. Thank you so much.
Thank you. Ladies and gentlemen, as a reminder, you may press star and 1 to ask a question. Once again, ladies and gentlemen, to ask a question, please press star and 1. As there are no further questions, I would now like to hand the conference over to the management for the closing comments. Over to you, sir.
I take this opportunity to thank everyone for joining the call. I hope we have been able to address all your queries. For any further information, you can get in touch with us or with our investor relations advisor. We wish you all a very happy weekend. Thank you.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us. You may now disconnect your